Hello and welcome. This is Sergio Moreau, and we are here at Rebel One Live. Tonight we have a special guest, Mac Conwell, who is managing director of Rare Breeds. Thanks for joining today, Mac.
How's it going, man? Happy to be here.
Yeah, happy to have you. I met Mac as a speaker at another conference, and have we've crossed paths before. Always admired Mac's just persona and candor. So glad to have you this evening to share a little bit more about Mac's background. So computer science and also a serial entrepreneur. He went to Morgan State University. He is a native now of Baltimore, Maryland, and previously was working as the fund manager at Maryland Technology Development Corporation, or TEDCO, and was there for several years, almost about 4 years, and has left now to start Rare Breed Ventures. So, Mac, if you can share with the audience, what is Rare Breed Ventures?
Yeah, so Rare Breed is a pre-seed to seed venture fund investing in exceptional entrepreneurs. So we invest primarily, we invest all over the country, primarily outside the major tech hubs, so outside of Silicon Valley, New York, and Massachusetts. We will opportunistically participate in those areas. That's not where the majority of our deal flow comes from. And we'll probably make a few international investments. Um, we have a target check size of 250,000, so slightly higher than what you typically see at pre-seed, but that's very strategic. And we look for two things in founders that we invest in. We're industry agnostic. We don't invest in life sciences because, I don't know how to evaluate a therapeutic. It's just not my skill set. But we'll do just about anything else. But the two things we look for is, if it's a software company, we like to see a clearly repeatable or unique customer acquisition strategy. And if it's a physical product, we like physical products, and typically in consumer markets that have lacked innovation in 10 or more years. It's kind of legacy markets, because those two founders tend to be out of the box thinkers and out of the box problem solvers. And that's really what we're optimized for.
Great. So, can you share a little bit more on your focus on hardware? Usually, people shy away from hardware; they go to software because hardware is hard. Iteration loops are longer. Your background's in CS. What was the emphasis around hardware?
It's interesting because, when I think about hardware, I just think about not mine, but the fund's thesis in general. A lot of it, kind of I really backed into it, right? So when I worked for the state of Maryland, I did seed investments and I did pre-seed investments. And when I looked over the portfolio and I thought about the companies I got really excited about and the companies that I thought had the best chance to win, these two type of companies kept coming up over and over again. And the reason I like hardware, and it's really hardware in specific verticals, right? These verticals that have lacked innovation, it's because there just hasn't been innovation, right? So, when you think
You're
about,
looking for the next Nest or August, right?
not
Those
even
those.
that.
Okay.
So the next nest is too Silicon Valley-ish, right? That's too normal. That's not what we're looking for. I'm looking for the next Spanx, right? I'm looking for
Okay.
that founder that people aren't thinking about. That company is doing something so different. That's wow, that seems so simple, but how come nobody was investing in that kind of a thing? And really, if I think about one of my favorite founders is a company in the black hair care space, not in the black hair, it's the hair care space, and it's a tool. And it's really intriguing because, if you think about if you go into any store or any hair shop and you walk down the aisles and you look at the different tools people have for their hair, it's the exact same things we've had since we were kids. It's like the only industry where everything's still the same for the last 30, 40 years. It's kind of crazy, right? Dyson came out with a new blow dryer a few years ago that's just got a different shape, and people went crazy about it, right? There's so much room for innovation. And so that's why physical products I like, even though other investors want to stay away from it. I'm not
Love
like
it.
other investors.
There you go. I love it. So, before we talk about how you're not like other investors, and also just a hint to people watching, we're going to talk about how Mac is starting his fund and being public about it, and 501(c)(6) and all of those things. But before we do that, I want to hear more about Mac sharing his journey. How did you go from being a hacker and now to investor, from CS, to now being on the other side of the table. What can you walk us through that journey?
Yeah, it was a lot of luck and a lot of arrogance. That's how I got here, right? So like, I was going to school for computer science. My sophomore year, got an internship with Department of Defense and got a top secret clearance. So then I was arrogant enough to drop out of school and get a job in Northrop Grumman, right? I spent several years doing that. After that, in 2010, me and two of my best friends decided to start a company, right? We didn't know what a startup was. We didn't know what VCs were. We were just three engineers. Um, and we were arrogant enough to believe we could build the next Facebook, right? Like, so we tried it. Ran that company for 4.5 years. That was, you know, entrepreneurship can be a bumpy ride. Eventually sold that technology off to a division of a Fortune 100 company, which was really cool. Sounds cooler than it is, but that's a whole nother story. Um, After that, I started another company, and raised some money for that one. And that company didn't work out. And throughout the process, I also went through three accelerators, which that's also some more great stories there. Um, and so after my second company failed, I came back home to Baltimore and got a job at a marketing firm I hated. And after being at that firm for a year, um, I saw an email from TEDCO, the Maryland Technology Development Corporation, saying they were hiring a fund manager. And I was arrogant enough to believe I could leave my job working at this marketing firm to go be a fund manager. Right? Um, and they agreed. I went through 4 months worth of interviews, and they finally said, "Yeah, we want you on staff." And that's kind of how it started. It was just a lot of luck, a lot of betting on myself, and like me believing in myself enough to like, yeah, I can do that. Like, I don't have a finance background. I don't even have a college degree. Like even my first job, right? It's so hilarious. So when I got my first job, it was a database administration position, right? I didn't know a thing about databases. I never touched a database a day of my life. And so I was like, I'm telling them about who I am and what I can do. And it's a top secret, job. So they can't really tell you much. And so they're like, do you want the job? I'm like, yeah. They're like, can you do this, that, and that? Sure. I could do all that. But I set my start date out like a month out. So I spent the month teaching myself databases so that when I got on the job, I'd be ready to go. But that's just kind of how it's worked for me, right?
That's awesome. I wouldn't call it, sometimes people say arrogance. I would say confidence, right? Like if you have the negative connotation, but you're right. It's like having the confidence you can do it, jumping in. No, that's great. I'm gonna go back when you talked about running a startup and then selling it to a Fortune 100 company, and you said, oh, there's a story there. What was that experience like?
Um, I've talked about this on other podcasts, but I don't know if as many people know. Like it wasn't like it was a good outcome. It wasn't a great outcome. And really what happened was so like I said, when we started, we didn't know what VCs were, we didn't know what startups were. We hadn't heard that you should build something you're passionate about. We were just building something that we thought was cool. And after 4.5 years, we had built this company. We had gone through two accelerators. We had lived in San Francisco for 9 months, like fat broke, trying to make it work. We've met with all these great people, and like we had just gotten to the point where we had pivoted. And we actually started making some money, right? Like things were looking good. And then my best friend, who was our CTO at the time, he's like, you know what? We keep learning all this stuff, and like everybody says you should build stuff you're passionate about. I'm not passionate about this. I don't really want to do this. And I was like, you gotta be kidding me. We've just spent the last 4.5 years and now we're making money. Like we were in talks with doing a deal with Disney. We had just finished doing a deal with Nickelodeon. Like we were moving. He's like, yeah, I don't want to do this. And I was like, all right, well, I guess if you don't want to do this, I don't want to do this either. like we started making money, but we weren't making enough for me to be like, I gotta fight for this. And so as we were kind of, talking through it, we kind of started to spin some stuff down. And one of our customers said, hey, we see things are, moving a little slower than they used to be because, we stopped paying so much on our servers and everything. Like, what's going on? And so we're like, yeah, we're, I tried to spin it. Like, yeah, we're going through some changes, we're doing some things on the technical side, how's your experience? They're like, we really love it. Was wondering if you were interested in like maybe doing something exclusively. And I was like, we could do that. Or if you want to, you could buy it. And they was like, well, it's worth a conversation. And so then we kind of put together a fake bidding war between like three of our clients and kind of made it work out. So again, got really supremely lucky on that one. And it's not like it's a huge outcome. Like, we're not allowed to talk about the company or how much it was, but it's not like it was great. Like, I'm not independently wealthy. I'm not even an accredited investor, right? Like, I blew all that money on my second company.
Yep. I hear you. I hear you. No, it's I love that's what I tell people also about I mean it when people say, "Oh, I had an exit," not every exit means that you're rolling in money or you're a millionaire afterwards. So that's a good thing for people to understand. And then understand exactly what you're saying. It's like years of working on a startup, you're usually close to broke most of the time. Just trying to grind it out.
Absolutely.
Even talking about what is it, fund economics, I explained to somebody how you can have a $10 million fund and not be making that much money, and they're like, I don't understand how that's accurate.
I try to explain to people all the time, like, if you want to be rich and make a lot of money, like, don't start a fund. Maybe go work at a big fund. That could work out. But starting a fund, unless you're going to start a really big fund, that's like, there are better ways to make money in this world. Like, I can make so much more money as an operator or entrepreneur, like at this stage in my career. Like, I could so easily go and work somewhere that's like head of growth and like pay and like get like a beautiful salary and be considered a credit investor. Like, me starting a fund, like, it's going to be like a good 6 or 7 years before I get there. And so, like, it's a labor of love, though. You gotta
Well,
kind of like this.
let's talk about that love. What made you go from the Maryland Tech Development Corporation to saying, I want to do it on my own? What inspired that?
Yeah, so it's interesting because I got the job at Tedco, and like that breaks me into the industry, right? And so just like anybody else, now I'm plotting the course. This is my third career. I went from being an engineer to an entrepreneur to now doing this investment thing. So like now I got to plot my career. I'm starting from the bottom again. I'm working for the state, so I don't get paid a whole lot. Like, I'm working for the state of Maryland. So I'm like, yeah, I'm gonna give it a couple years. I'm building up my skill set, learn some things. I'm gonna go off and join a big fund and make myself some money, right? But then along the way, a couple things happened. And really, the first thing was I found a love for this. Like, I truly love doing this work. You know, People always say, if you find the job you love, and you'll never feel like you worked a day in your life. And I always thought that was bullshit. Like, who actually has a job they love? Like, I didn't think something like that existed until I started working at Tedco. And like, I legitimately love my job. Like, they pays me to talk and hang out with entrepreneurs and to go at events and speak and then to give people money. Like, I was doing most of that stuff for free, except for giving people money because I have money, right? Like, everything else I was already doing. Like, y'all gonna pay me to do what I love to do? Like, are y'all sure? It was the most amazing experience ever. So I figured I found that I loved the work. Then when I was working at Tedco, when I first got hired, they were having issues investing in black-led startups. And that was in 2016. So in 2017, I led an initiative to create a pre-seed fund to invest in those entrepreneurs earlier than anybody else, really trying to institutionalize the friends and family around. And so I got to learn a lot about pre-seed, understand that, and I really fell in love with the amount of impact I could create. Right, being able to invest at that stage, being able to invest in underrepresented founders, to help see these founders and these companies grow, the amount of impact I could create was far larger than just me running a company, right? And so that became really exciting. But then the reason I decided I had to start my own fund was because an entrepreneur. It's an entrepreneur in particular, right? And so anybody who's read my Medium article, I talk about the two entrepreneurs who changed my life. But the one who made me realize I had to start a fund was this woman I met in Baltimore. She mentioned me through a friend of a friend because she saw an article about the fund we were starting. She tells me she has a great idea. She tells me what her idea was, and it blew me away. Like, it stopped me in my tracks because it was such an original thought. Like, as a VC, I hear so many cool ideas, but I very rarely hear something like truly unique and original. Like, you almost never hear that, right? So when I did, it caught me off guard. And I was like, oh, that's really amazing. But it was an industry I didn't understand well. And the more I got to learn about the industry, the more I saw like, oh, there's real opportunity here. But it was a physical product. And, she's a single mom, trying to make it, got this great idea, trying to figure out what's next, right? And so from there, I tried to help her. I'm making introductions. I'm teaching her about entrepreneurship and things, and nobody wants to help her. And like for 2 years, and so she finally creates. She buys a small mechanism online and reconfigures it to prove out that what she wants to build can work. Like, this woman's brilliant. She proves it. It works. It does what she said it was going to do, and still nobody wants to listen to her, right? So a little more than a year ago, she calls me and tells me she figured out how she was going to pay for a prototype. I'm like, cool. I thought she was calling me to tell me about a loan. She called me to tell me she became a surrogate mother. She ended up giving birth to twins for a fairly nominal amount of money just so she could start building her product. And I got really upset because I couldn't think of a single fund in the United States that I could have worked at and made that investment just because of how early it was and biases in the industry. And so I knew in that moment I had to start a fund because I never wanted to meet an entrepreneur that had the opportunity to build such an amazing company and not be able to back. Like, there's nothing in the space that she's looking to build her product in. Like, she has the potential to be a category definer. And this is what every VC says they're looking for. She's that. And nobody wants to, nothing.
Yep.
So like for me, that was just like, it was a catalyst.
Absolutely. No, it's awesome you share that. And what's interesting as well is some of the larger funds can write. What is it? I remember it reminds me of a on the other side. You're like, why don't VCs write uh, checks to people with just in a concept, very early. And I was like, they do, but usually it's a very small set and a very coveted opportunities to a very close knit set of people. Ends up not usually not being underrepresented population or just not geographically represented either. So yeah, I remember hearing that from there was a speaker at a multi-billion-dollar fund that came, and we were talking, and he's like, yeah, I put $200,000 into, my friend from Princeton. He's like, yeah, the startup didn't do well, but he's $1 billion fund, right? So $200,000 is meaningless
Means nothing.
that he can get that back. He can 20x that, and it doesn't make an impact in his fund. So it's just understanding that. So no, appreciate you sharing that. There's a definitely a passion in this space. Shifting one thing I did want to shift back to, for you, especially around being different. We're all about a Rebel One, celebrating the rebels. So I'm glad a fellow rebel is here. If Mac can you talk about how are you building your fund differently? You talked about building a 501c6 and being public about your fundraise. As we both know, once you start a fund, usually you can't be public about it and solicit funds. So how are you doing that differently?
Yeah, so it's interesting. So a 506c designation. So 506, most funds pick 506b designation, right? It basically allows you to raise a fund, but you cannot publicly solicit. Um, but it also means that up to 35 of the investors in your fund don't have to be accredited, and you don't have to do as much to prove that somebody's accredited investor. Versus 506c, you can publicly solicit, but everybody has to be an accredited investor, and you have to verify up to some degree that they are an accredited investor, right? And so the industry standard is 506b. Like that's what I've always known. That's what I've always heard. That's what people always do. But then earlier this year, Angels just came out with their rolling fund, and the rolling funds were really interesting. And one of the big things about them was publicly soliciting, and so that was really interesting. And so I looked at doing a rolling fund, but I didn't like the way they do their LP payouts. So very from a technical standpoint, in a traditional fund, if somebody invests in your fund, they get returns based on all the companies you invested out of that fund. From a rolling fund, people get returns based on how many quarters they invest in. So if somebody only invests in 4 quarters, but the unicorn company you invest in is in like quarter 8, well, then the person only invested in the first 4 quarters don't get any of the returns from the company you invested in later, which didn't sit well for me, especially because a lot of my earliest LPs, the people who are backing me and putting money in my fund, were mentors and advisor of mine. People who watched me like go through this journey over the last 10 years. They weren't even big checks, but these are people who are like really meaningful to me. And so making sure that they got the upside from all the companies under my first fund was really critical. So then, I started trying to figure out how to do, a traditional fund under using the same thing, and quickly came to a realization that nobody ever said that you couldn't do a traditional fund on the 506c, right? Like anybody can do that. Like, it's just a designation. Well, I was talking to Angels List about doing that, and there were some breakdowns in communication there, and I just wanted to move quickly. So I ended up going to Carter, and I talked to Carter about, doing my fund admin and asking them, could they support a fund like that? And they were like, sure. And so then taking a step back, when you look at the rolling funds, most of the advantages people see, being able to publicly solicit, having a website people can go to and click a button and subscribe, all that kind of stuff, a lot of that's just front facing and technological. A lot of the more issues are things that people push back on. Those are more structural with the way of having quarterly funds is set up. So then if all the advantages are just structural and technological, like you can recreate that. And so what we decided to do was, we said we would do 506c. We put up a website where if you go to rarebreed.vc, there's a button that says become an LP. If you click that button, you fill out a small form. And then after that, the last piece to the puzzle was we need to figure out how somebody could dynamically send this information. And then we fill out your subscription docs, right? So how could we make the subscription docs? Because there's certain fields that have to be changed, that is going to be different for every person. So you have to be able to do that dynamically and then be able to digitally sign, right? Well, Carter has a partnership with a company called Anduin. And Anduin, like one of their specialties is turning subscription docs into customizable guided experiences and then digitally signing, right? Like perfect, right? And so now if you go to our website, you click on the button, become an LP, you give us a few pieces of information. And if you say that you're an accredited investor, you click a button and it takes you straight to our subscription docs. Boom. You can fill out the paperwork right then and there, right? There are literally people who have gone through and filled out paperwork to be LPs in our fund who I've never met or ever talked to. Now, I'm setting up meetings with all those people and trying to get to know who these folks are, but like literally, like people can sign up to be LPs in my fund like while I'm sleeping, and like I never have to know. And the other advantage is 506c works really well to publicly solicit if you have a following and a brand. And so for people who follow me on Twitter, Mac the VC, from June till now, I've gone from 2,500 followers to close to 18,000, right? So like I've generated a sizable following over a short period of time. So like the ability to publicly talk about my fund is really advantageous for me, right? And so that's how we decided to do it differently. And oddly enough, I put out a Medium article talking about it, and I didn't realize like I got a outpouring of people wanting to know more about it because folks had never heard of a fund being raised this way before. For me, I never thought about it. Like people are trying to say how innovative it is. I'm just trying to figure out how to raise this money. Like I wasn't thinking about innovative. I was just trying to think about what could work for us.
I love
And
it.
it's just
I
kind of
love
happened
it.
that way.
Everybody's pushing on this industry because more founders want more capital. There's a lot of friction there. So this is great. It's like great, a great learning, right? That other people can absorb. And then you also figuring out from the rolling funds, which other individuals might be new to folks, but that was an innovation in business model, really, right? LPs can
Right.
subscribe for quarters where the typical fund length, and then you're going in and changing up the how you can make it publicly known or not, right? And I think that's just that's the innovation that needs to happen in the space. That's what a lot of people don't understand. Venture capital, I always say, I'm curious your thoughts on this, but like my opinion is that some of the early stage venture capital is in competition or with crowdfunding. That crowdfunding is becoming more robust, and over time can increase the number of early stage founders and usurp it. But I think it's an innovation, right? Like it's growing the early stage investment space. What are your thoughts on crowdfunding and really making an impact for early stage founders?
I think crowdfunding is interesting, right? I think the idea of retail investors being to participate in these private companies is really impactful. I would like to see retail investors be able to do the same thing for venture funds. It'd be really great if they can raise the number of LPs and like
Yep.
find ways for like retail investors to invest in my fund. I would love that. Um, but I do also have some concerns, right? So I have seen situations where founders are setting up to do equity crowdfunding, but they're setting their own valuations, right? And the value and they're setting their valuations way too high. They're using their brand to raise this money and get people to put money into a company. But like, if you look at some of those pages, they they make it really hard for you to find the real data, right? Like me as a VC, like I dig into a company. I look at their financials, I get them to understand the tech, all that kind of stuff. I've seen, you know, equity crowdfunding campaigns where like the information on the company's financials are buried so deep that like you got to be on the page for a good 10 minutes, like actually trying to find it.
My
I
my
think
most
equity.
common question on crowdfunding pages is, "What was your revenue last month?" That was and that should not be the case. To your point, there's a level of lack of transparency that I don't enjoy. But that's I'm with you.
Yeah, the filing docs are there, but they're not easy to find. And then when you look at revenues, they show you like two previous years. So you almost try to set it up like they do public companies, but it's like, no, what did you do the last like 6 months? Like what's going on in the company? I want to know what happened last year. Like it has nothing to do with what we're talking about right now, right? And like within those documents, buried deep in them, there are things like, our goal is to raise X amount of dollars to get us X amount of runway. That is nowhere on this crowdfunding page. Like this is it's in your docs, but like I only know that because like this is what I do for a living. Like the average retail investor probably didn't see that. So I actually think equity crowdfunding is needed and we need to do more of it. I also think there needs to be some additional regulations to protect, the retail investor. Like you just see a cool entrepreneur that you like, yeah, I want to back this founder. I see them on TV or the radio. They're really cool. I want to back them. But it's like, it's more than that. It's not about how cool the founder is or how unique a founder is. It's about the business. Like the point of this is to get returns on your money, not just to back somebody for the sake of back. Now, if you want to do that, you can throw away your money, do that. It's fine, right? But like, I think equity crowdfunding still needs to get smarter.
Love it. Um, on Taking a step back to your innovation, what other ways do you think venture can be innovated upon, in your opinion? This is one way you found
Yeah,
501c6 or
I think there's a lot of ways for venture to be innovated on because it hasn't for so long. Like if you look at like where the where the majority of venture money goes to is 3 states. Like 70% of all venture dollars goes to 3 states. It's ridiculous, right? Who VCs are, their backgrounds, things like that. Um, NDVC has their really unique scout program, really interesting, where they have a ton of scouts sending them deals, and like if they invest in the deal that you send them, you know, they give you a piece of carry, they cut you a check. Like that kind of stuff is really cool, right? Democratizing, the industry and also expanding the network. Um, those things are really interesting. And so as I think through the industry, there's just room for new thoughts, right? The industry's gotten so stagnant in the way that it thinks. Like even now, I'll meet with people who've been in the industry for so long. Like they'll give me advice that's completely counter to my fund, and they don't even realize. Like I literally just told them what my fund is and how we invest, and then they give me the age old. This is how you should do it as a VC. Like, no, I don't want to do it that way, right? Like the one of the one of the worst pieces of advice that I think VCs, like traditional VCs, give all the time, and they're going to tell you like this is how the industry works, this is how you make it, is you need to make friends with other VCs, especially the big name VCs, so that when they invest in companies, if they like you, they'll save space on that company's cap table for you to get in on, right? And inherently that sounds smart and that's a strategy. It's not a bad one, right? But it also means I'm not looking for companies that I personally have conviction in. I'm looking for companies that other people have conviction in, and I'm going to follow along with that. That's completely counter to what I do. That is not what I do at all, right? At RareBreed, we actually don't care who else is on the cap table. I don't care who the other investors are, because we're going to make a decision on this company based on us, not based on the other names on the cap table or who's there or who gave us a call. Like, no, that's not how that's going to work. And in general, if First Round or Sequoia or Andreessen calls me like, hey, we found this great company we're investing in, we want you on the cap table, that's nice. The round's probably too expensive. You know,
Yeah.
I don't really know the founder that well. Like the likelihood we're going to make that investment is low. Because here's the other thing, right? Here's the thing that we want to talk about. Everybody wants to talk about you want to get in the deal with all these big name investors, right? They fail as much as everybody else. Like 70 to 75% of their portfolios go straight to 0-2. Like they're not special. The only thing that separates the best funds from the worst funds is the wins. If you got one or two decacorns in your fund, you're going to be one of the top performing funds. And that has nothing to do with your selection of all the other companies you invested in. Like it has literally nothing else to do. Like it does not mean you're good at this. It just means you're good at getting one or two. And so like, let me get those one or two on my own. Let me find those founders where I find them in places other people aren't looking. I don't want to be where everybody else is, because there's a bunch of y'all already doing that.
Love it. Yeah. I mean, it's true. It's true. You gotta. It's easy in this space to just, um, to think to just follow the crowd, invest with a number of people. Um, but like you're saying, it's hard to develop a really clear strategy. What a lot of people don't know is when another, if it has a whole bunch of lead investors, they might have been in at a great valuation a couple of rounds ago, right? So you're investing at a much higher price, based on their kind of like the, you could call it hot air, you could call it expertise, you could, but it could be anything. So yeah, you just gotta making decisions on your own. But rolling it back, I know we're just about time. If you can share a piece of advice for some of those early founders that are looking to get started, the ones that you love to coach, what piece of advice would you share?
The biggest piece of advice I give founders is, as much and as innovative as you want to be with your product and the solution that you're building, be just as innovative as with your customer acquisition, right? Because like customer acquisition is what's going to get you paid, either in revenue or funding. Like it's the name of this game is your growth, right? And so I see founders who get so caught up in this product, the building is so amazing, it's better than anything on the market. That's cool. That's great. I've seen tons of products that are way better than anything on the market, never go anywhere. Because if you have a great product but you don't know how to get customers, it doesn't matter. Like it literally doesn't matter. And like my favorite example of this is the iPod. The iPod revolutionized MP3 players, right? Because all it was a glorified MP3 player, right? It was also one of the shittiest MP3 players on the market. Like there was a time I worked at Geek Squad, and the number one return products we got were iPods because they broke all the time. They would get the little sad face or whatever. Like people always have to bring them in. Like it was like every day we would get tons of these things back in. They were always breaking, and people were always buying more, right? But then if you had the Zoom, which Microsoft made, which was a far superior product, like just in terms of quality, it was an amazing product. But they didn't get that customer acquisition strategy down. iPod and Apple, they cornered the market with the great branding and great marketing. And that's all they needed to win. And right, they got enough of a head start that they could catch up and fix all the other stuff along the way. And so I tell founders, like, be creative with your customer acquisition. And don't make the excuse that if you don't get funding from investors that you're not going to have the company. Well, if you can't figure out how to build a company without my money, well, then you never had a company to begin with. That's not how this works. Like, you got to show me that you know what you're doing and you got a plan. Because here's the other thing, right? Like, I could give you the money, but if I give you the money and you haven't figured out that customer acquisition stuff already, then that means you're going to use my money to do a bunch of tests and try to figure it out. And what's going to happen is you're going to try a bunch of stuff. You're going to blow through that money, and maybe you might figure out what works. But by the time you figure out what works, you probably ran through so much money that you need to raise more. But now you've gone so long without growing fast enough. I'm not giving you any more money, and no other investor is going to give you any more money because you've already taken this much time. You haven't grown fast enough, and you're going to be like, "But in the last 2 months, we figured it out." Well, if you had to figure that out before I gave you the money, we'd be further along versus you blowing my money and figuring it out just for us to be here staring at each other like, now what? Right?
There you go. So thank you, Mac. So
Absolutely.
for focus on sales and that customer acquisition strategy. So thank you guys for watching. Again, for those watching, this is Rebel One Live. This is Mac Conwell, managing partner at Rare Breed Ventures. So thanks for joining us, Mac.
No problem.